Hey, financial freedom seekers, Simon Dixon here. And today I'm going to be talking about the 3 red flags that I'm going to be looking out for in 2023 in the Bitcoin and crypto markets. And I'm going to share those with you today. And as always, as a reward for holding me accountable to check in for my workout each morning, I'm giving you some content. Now, the first thing that I do want to cover is the importance of your mindset during a bear market. Your mindset during a bear market is really going to be the difference between whether a bear market becomes a long-term wealth generating exercise for you, or whether it becomes something where you sell all your assets in distress and end up furthering yourself down the financial ladder rather than up the financial ladder. Bear markets are your friends when you have a long-term plan. If you're a quick pump and dumper and you're trying to make fast bucks and you're trying to get rich quick, then bear markets are usually not your friends, because it either drives you into speculation like short selling, which requires you to put up money on margin and wreck your portfolio and become a gambler rather than becoming an investor. So when I cover these things, please do not let the negativity make you think that this is a reason to not be involved in the market, or to use it in order to disempower yourself into a capitulation exercise, which is where you sell everything in distress. And the number one reason why people are rubbish at investing is because they use the sentiment of the market to sell in distress in bear markets and buy into FOMO, fear of missing out, in bull markets at the tops of those markets, rather than doing the counter-cyclical thing, which is buying into distress. And I don't even sell into bull markets because I don't do directional. I just do long-term wealth creation investment theses. So the point of me telling you this is because before I go through the 3 red flags, I want you to understand this concept that I learned a long time ago that really helped me become a better investor, which is the concept of circle of influence. And this doesn't apply just to wealth creation, it applies to everything in your life. The more time we can really, if you think about your 2 activities, you can split your 2 activities into 2 things. One is something that happens within your circle of influence, and the other is things that happen outside of your circle of influence. Inside your circle of influence means that your actions can have a direct impact, a cause and effect, by you taking certain actions. There's other things like information we consume, like for example, politics. We may not have any influence over the outcome of politics. However, if we actively engage in the process of campaigning or being a part of it, then it moves from outside of our circle of influence to inside our circle of influence. The classic example is, the weather. The only way you can move the weather into your circle of influence is if you're willing to take the action to move your location to where the weather is more conducive to what you're trying to achieve in your life. Now, when you analyze from the perspective of circle of influence, you put all accountability onto yourself. And this is the key to investing, the key to productivity, the key to most things in your life, is recognizing that I can influence the things that are going to impact me. And if they are outside of my circle of influence, I need to minimize that content to things that are only in my circle of influence. So if you're watching politics from the perspective of the macro environment and how you're going to make investment decisions, then really you can't influence the politics, it's outside of your circle of influence, but you can influence how you're going to invest as a result of understanding those macro trends. Right, so why is circle of influence important? Well, it's important because we can't get caught up in the negativity to the point where we hit a paralysis where we're paralyzed into non-action. Because non-action is the definition of not getting the result that you want. Because it all starts with, as I've constantly talked about, a belief in what you want to achieve, or a vision or a mission, which then enforces a belief, which means that you take different action. When you take different action, you get different results. When you get different results, it reinforces your belief, and the circle of influence, as you become more influential, increases, and therefore the impact you can have. The bigger your circle of influence gets, the more productive you can get. The smaller it gets, then the smaller the sphere of action that you can take. Right. Now, why is that important? For two reasons. Firstly, in a bear market, you're going to be getting a lot of negativity. You may have noticed from me, if you're even following me on Twitter, that I'm covering some things which are pretty negative. So for example, when I invest in a company and then that company turns out to be not what I thought it was, I've got two choices here. I can bury my head, outside of the circle of influence and pretend it's not there, and then double down and make worse decisions. Or you can put your hands up, you can increase your circle of influence, and you can say, this was a bad investment, this is fraudulent, whatever it may be, if you know that. And then what actions can you take in order to engage, for example, in some of these Chapter 11 cases, in order to support file motions, or be a part of the Telegram groups, engage in the conversations in a results-driven, productive way. Maybe you want to bring in bidders into the auction process, or maybe you just want to be completely passive, cut your losses, not spend too much time on it, and recognize that it's outside of your circle of influence. So start building your alternative plans based upon following your likely recoveries. Okay, so this is important for a couple of reasons. Firstly, we are engaging in our industry in a new form of self-regulation as a result of a lot of the technical innovation I covered in my book, Bank to the Future, Protect Your Future Before Governments Go Bust, the 7 disruptive technologies over a decade ago, but now they're really in full force, where we have self-regulation through radical transparency. In 2022, I spent a lot of time on Twitter Spaces, where the most influential people in the world join those spaces, from Elon Musk's, in the traditional business world, or in the Bitcoin and crypto world, the CZs of the world, and everything in between, incredible, large multi-million followers that were joining these Twitter Spaces, and the traditional media, and regulators, and law enforcers, where we were getting people like SBF, the fraudulent owner of the FTX exchange, and he was coming on these Twitter Spaces in order to answer questions in what has been termed, citizen journalism, where a collective mind of lots of different people, are invited up as speakers in order to ask questions, to bring in these different experiences. And it led directly to, the uncovering of fraudulent activity that has led to the arrest of SBF as a result, which had to happen as a result of all the fraudulent activity that was happening within that exchange. So this, citizen journalism, civilian journalism, whatever you want to call it, has led to radical transparency, where people have to face head on some of their flaws and challenges and try and fix them over time. And so it can only improve the industry. It's a bit like competition. When you have a monopoly, it's bad for consumers. But when you have collaborative competition where two companies are competing in a healthy way rather than, an unhealthy way, if they have principles and they subscribe to a moral code, rather than trying to tack each other down, you can use this in order to be better as a result of this radical transparency. And therefore it keeps both companies accountable to a higher standard. They have their internal meetings, and we're not perfect. No one's perfect, but they figure out how they can improve as a result of learning from other companies and various other things. So this self-regulation through radical transparency led to these influential Twitter spaces where the traditional media were coming on our Twitter spaces in order to cover what they're going to be covering on their news, and where, for example, we through our industry were putting companies under pressure through self-regulation, and then regulators could ask and enforce various things. Now, the good actors are able to adjust or are able to improve or able to decide, what type of standard they need to be held to. And it leads to a very, very challenging thing with our environment, but the net improvement as a result of this. So although it comes across as negativity, it always has to be framed in the perspective of what can be done. And when there is fraud, it has to be called out, because the further it goes, the more damage and more harm it does to other people. So a lot of people were very, scared of fudding and stuff, when calling out certain things. That is a real thing. There's fake news. That is certainly a real thing, and then that goes through its own, journalism, as we were, citizen journalism, and you have to, when you've accidentally fudded, you have to put your hands up and say, well, that's, we have to be committed to the truth here. But also, when it is fraud, we can't double down. We have to come out and we have to accept, I invested in that. That was wrong. What is the standard that we need to hold ourselves to right now? And what are the consequences, and what can I do within my circle of influence? Well, doubling down for the sake of it when there has been wrongdoing can only cause more harm to more people, and eventually the earlier you can catch that stuff, the better. Right, okay. So radical self-transparent, self-regulation through radical transparency is a very interesting trend that no one's going to be able to fight, and all businesses, I think, are going to be adjusting to it. The other thing within your circle of influence is not using this as a way to say, I'm out. Now, if you are out, if you don't have conviction around the principle-led investment theses, so if you think about my principle-led investment theses, I've covered it at retirementplanb.com in the video series, where essentially I come from a perspective of what are the principles, and I stick to those principles, and I invest every single month in the same way, and only improve the principles, improve diversification, improve risk management. But I don't allow that to get in the way of, for example, only buying Bitcoin when everyone else is buying, and selling Bitcoin when everyone else is selling. In fact, I just buy every single month based upon the principle, and adjust the principle if new information is giving me new information to do that. But most of it is also hedges against different risks. So whatever happens in the world, I'm okay. And that's the goal. The destination of financial freedom is that your assets end up protecting you from events that you cannot forecast, and you prepare for those different scenarios. Rather than just being exposed to one scenario where you get wrecked, which is the definition of speculation, gambling, and trading. Okay. So the point here is to use this in order to use bear markets to double into your investment theses. So you get more reasonable valuations in companies. So for example, I buy equities in companies because they're long-term investments through Bank to the Future, the company I co-founded, because I don't want to mess around with all the short-term speculation. The companies that I accumulate, for example, shares in exchanges, they have teams of thousands of people that have to adjust to all the trends, and the market gives them the determination of their profit because they have to list different coins rather than me having to speculate on different coins. It forces me into a longer term hodl, and I invest rather than trade. And 90% of people get wrecked trading, at the expense of the 10% that can do it. But it's normally the investors is the great equalizer if you've subscribed to any of my content. Okay. So that's why I invest in the equities, and I continue to buy Bitcoin. And so as a Bitcoin thinker, I'm able to diversify through equities in my Bitcoin portfolio and buy Bitcoin. And the cheaper it gets in terms of dollar terms, the more Bitcoin I end up, because I'm valuing my wealth in Bitcoin for that part of the portfolio. See previous videos where I covered like my 4 buckets and various other things over the last few days in 2023. Okay, so now we've got the foundation. I wanted to frame that because I don't want this just to be negativity for the sake of negativity for headlines. I want everything to be framed in the context of your circle of influence. So you can either use it to contribute to radical transparency, citizen journalism, self-regulation to prevent some of the issues, and also use the fact that we're in bear markets in order to have your principle-led strategy so that you can invest into better valuations and accumulate more assets and use bear markets as wealth generation events. And that comes from separating your funds, your spending money, as was covered in previous videos. Okay, right, so what are the 3 red flags that I'm looking out for? You'll hear me talking about it. I'm going to be doing my AMA this Friday, by the way. If you have any questions, head over to my Twitter. And I'll try and put some links down there as well. But look for my next Twitter space, and you can set a reminder and you can ask me questions. We can engage on any of these topics on Bitcoin chapter 11s, whatever it may be. So I'll see you. I do that every Friday. And I'll also be invited to a couple of other Twitter spaces to discuss some of these red flags. The first one I covered on my Twitter, so head over to @SimonDixonTwit. And you'll see a thread where I covered on Digital Currency Group and the things that concern me at the moment. So Digital Currency Group, we've been co-investing at Bank to the Future for many years in many of the deals. They're shareholders in many of the companies, but I believe as a result of its exposure to Genesis and also the inferior product of GBTC, which is a trust that gives you exposure to Bitcoin, that there has been some activities that concern me. The Winklevoss twins recently called it out, and as I said in previous things, I had to call out Celsius as a shareholder when I realized what activities were happening and the types of activities by the founder. CZ had to call out FTX, and now the Winklevoss twins, through their partnership, are calling out Digital Currency Group. There are some red flags. Check out the tweet where I went through some of that. I went through the letter and some of the parallels that I'm going to be concerned about. I'll be covering on different Twitter spaces this week as well. So this is one of the systemic risk events that really could have a material impact on our market and more contagion. The other one is stablecoins in general. So as you know, through the Bank to the Future secondary market, people have shares in Circle and Bitfinex, and both of those are connected with the top 2 stablecoins, USDC and USDT. I diversify across those because I think stablecoins is a very, very important part of the ecosystem, but it is also going through regulatory crackdowns inside the US. So which means I diversify for 2 different reasons. Because being within the US is a benefit and a problem, and being outside the US is a benefit and a problem. Being outside the US is a benefit because you're able to do, you become an enemy. Well, it's a problem because you become an enemy of the US when you're creating dollars that are not strictly, obviously any dollars are within the Federal Reserve System, but when you're creating digital dollars, the US likes to exercise influence, and they have been exercising lots of influence. The Department of Justice has done investigations and stuff, but that also creates a benefit because if they're still here, they've been through all of that scrutiny, any issues potentially may have been resolved, but at the same time, it's a very regulatory hostile environment and people still have lots of questions. They have moved more and more towards transparency, but it's a movement as opposed to a finished at the moment. So then you've got Circle, for example. They have more of the radical transparency of the regulatory regime in the US, but at the same time, the US is very regulatory hostile as they create their own central bank digital currencies, or JP Morgan creates JP Morgan coin that's used for their security token play. And so therefore, you end up often with an inferior product as a result of being in the regime of the existing world empire, which is often more defensive and less innovative than the countries that need to prove themselves and try and embrace financial innovation in order to gain more of an edge in more of a competitive environment, as we say. So both of those have pros and cons. And so I diversify across the two. I have shares in the companies for full disclosure. As we said, this is about radical transparency now, but we need to watch the stablecoin market. There could be some big systemic risk events potentially to look out for. I hope we've got through them, and none of these see that they are going to happen. But if they do happen, we need to be prepared for those, because they could happen in 2023 as a result of this FTX scenario and regulatory crackdown and everything we're experiencing right now. And the final one is Binance. So the point about Binance is, I like CZ. I've spoken with CZ. He seems to be engaging in some of the Chapter 11 cases in order to put together offers for creditors. I think the offers could be a lot better. And hopefully radical transparency and pushing against that leads to better offers for creditors. But we shall see. It's a very distressed market right now. But the point about Binance is, as it's not a public company like Coinbase and they operate at big scales, we just don't know enough to be able to do that. So we have to engage in a lot of citizenship, journalism, self-regulation through radical transparency. And so I did a video, you can check it out on my YouTube channel. I uploaded a 3-hour space where a bunch of people were all discussing about some of the red flags in Binance that hopefully they will react to. Hopefully it leads to a better Binance. And as we say, it's a bit like when you have the event where you get everyone to the exchanges that are doing things correctly, don't mind if everyone withdraws their coins, puts them back later. It's a stress test. And a stress test, when people are doing things the correct way, is a good thing to make a company stronger. If they're engaging in using client money when they're not meant to be using client money, like we saw with FTX, or engaging in illegal hedge funds where they're not complying with securities laws, or rehypothecation, like Celsius was with banking, then that will expose itself. And if they're over reliant upon a token flywheel Ponzi scheme, like both FTX and Celsius were, then you can see exposure from that as well. So none of these are me saying these events are going to happen. It's me saying that there are 3 things where there are red flags, and we don't know which one's going to happen. But my guess is that something, at least one, is going to expose itself. Either they're going to use these markets to really fix the challenges, or regulators are going to enforce the action and they'll pass those stress tests, or we're going to see more black swan events that could lead to more distress. But remember, distress is within your circle of influence. That's the important message I wanted to get out to you, that if you are managing your funds correctly, as I covered in previous videos like the 4 buckets, then distress is your friend, because you can accumulate into weakness, which is where intergenerational and long-term wealth is created. And then you have to diversify for different outcomes in case your original investment thesis is wrong, because true financial freedom is when your assets pay for the lifestyle that you're doing to with a long-term plan, and you're diversified for different events so that you can be really the blessing and gift that I experience every day is because I spent 2 decades working on this, by either working in investment banking, studying economics, creating companies, investing in over 100 companies in the industry, writing books, and just obsessing over the subject for the last 2 decades. So I hope that was useful. Again, always remember you're alive at one of the most interesting and exciting times in financial history. Some are going to get wrecked, others are going to do really well in both the traditional economy and our Bitcoin and crypto opt-out of financial system economy. I want to make sure that you are on the right side of this change. If you enjoy this content, then please reciprocate by giving me a like. The more people that like it, the more people that YouTube will start to cover it, and the more people we can help in these distressed times. And please do share it with your friends and family if you think that they would benefit from this type of content. And I do this each and every day for you to hold me accountable to working out from the gym. And so if I don't check in, then you got to hold me accountable. But subscribe to this channel, hit the bell symbol, hit all, and it will send you an email notification each and every time I go live, so you can hold me accountable. We do it with peace, we do it with love, we do it with unity, and I'll see you tomorrow. Peace.